Okay. Hey, yo, what's up, Tony Gold? What's up? $73. Yeah, that's basically my entry. That's basically my entry right there. Okay. Well, I guess, I mean, I can at least expect a measured move here. You know, at least expect a measured move. Probably done a little bit more. Hey, yo, what's up, Alfred? What's up, everyone? Was able to make back a good portion of what I lost this morning, but I didn't push it before yesterday's session. And I did it without having to revenge trade or over leverage. I just got back to trading. I don't know what it is about the ES, but I try to call myself revenge trading on the ES, but ES don't got that type of energy to move me like that. It pisses me off, but it doesn't get underneath my skin like the Nasdaq does. That's how you know it's good. That's how you know how good the Nasdaq is, how good her shit is. Because ES don't even move me like that.
Iran's Revolutionary Guards. 3 oil tankers hit and halted in Strait of Hormuz after ignoring warnings, state TV.
Okay, I guess we could see the market come all the way back down. Yeah, I'm not gonna look for that game. All right, we got the profits locked in. Target fills, baby. We up. So now I brought back. So shit, I was down this morning, man. We started this morning.
Connection lost.
Okay. I kind of read through what you just said, Alfred. And I was about to say, oh man, dude, don't say it isn't so. But you said that right now you're right over at the buffer for your Lucid daily account. You hit the lock button. And this is your funded account, right? Actually, ooh, I just saw that. Another thing about the ES. Be mindful of these 15-minute gaps. Be mindful of that. 58 seconds. Be mindful of these gaps. There we go. Yeah, dude, honestly, man. Dude, that's tough, Alfred. I mean, That's tough. Yeah, what is it, like $51 that you have to make? $51 that you have to make, man. I mean, you'll get over it. I know you will, but man, try to take a deep breath once you get over it, bro. Payout fever comes in many shapes and forms. Please take a deep breath. I want to see you get paid out here and continue to be paid. All right, we'll see what happens here. The market's deciding if it wants to allow me to participate in a potential move back to the upside here. Yep. And that's hard, dude. Shit, you did that with the Nasdaq? Shit, that's hard, man. Or let me rephrase that. That's not hard. It's impressive. It's impressive. You should be proud of yourself. It's like taking a hit of cocaine, taking a shot of heroin, that angel dust, all that rolled up into one. Taking a hit and say, I'm not going to do it again. That's impressive. Then locked yourself out. I know your brain right now is, or that your brain or whatever part of us that's gambling is like, what the fuck are you doing? Like, what the fuck are you doing? We're trying to gamble tonight. What are you doing? I know that part of you was mad right now. Probably called you all kind of names. Yeah. Congratulations. You know, it's crazy. I haven't touched that that 250K account yet. I made $200 earlier today and I just haven't touched it. You know, I'm getting better with the ES. I'm going to focus mostly on the ES probably moving forward. Probably become the best ES trader on YouTube. It's not a goal or anything, but I realize that a lot of my bad habits on volatile instruments like the Nasdaq or gold, man, because I'm so used to volatile, crazy instruments, when the ES is like, dude, I'm in a downtrend, why are you going long? Or I'm in an uptrend, why are you trying to short? And the market, the ES likes to humble me on that. It's like, it's okay. You don't have to catch the top. You don't have to catch the bottom. If you catch, like right now, I was in at 73. The market already made this move right here. I got in at around 73 right there, and we still got a good trade down. Like it just went straight down. On the Nasdaq, would I enter in right here? No. On gold, would I enter in right here? No, because we all know that it's liable to do some bullshit like that and then come back down. So you have to plan for stuff like that. You have to put that type of price action into your plan, because if you don't, well, it's really good at hurting your feelings. So this was a 15. I took this trade because this is a 15-minute bullish gap right here, a bullish imbalance right here. That's why I took this trade. We'll see if it holds. I mean, usually they do, but I mean, if it doesn't hold this time, that's fine. That's fine. We'll get the money back. But there are trades that I'm just going to take because I just see that over time, if I take these trades 10 times on the ES, they'll work. So 15-minute gaps are very powerful trades on the ES from what I've been noticing. It's crazy that it's more powerful than a 1 hour, 4 hour. I reference those imbalances on my chart, but a 15-minute imbalance is the chef's kiss for the ES. I mean, the ES she doesn't know what to do when she gets into a 15-minute fair value gap, man. She's like, oh my God, it's a 15-minute fair value gap. Oh my God. I gotta react to it. That's just how the ES is. So I just take those trades, man, regardless of what the market's doing. If it works, it works. If it don't, it don't. Yeah, it does, man. Cause I mean, honestly, like I said, that account just really inspired me. It's just like, okay, I'm treating it as if that's going to be the only account like that. And if I mess up, then I'm not gonna get another opportunity like that again. And that's how I'm treating the account. That's why. I mean, I've already shared why I'm just sticking with the ES now. No more craziness. I'm tired of losing accounts. Now, I did blow some accounts trading the ES with my tendencies. I mean, I'm not gonna sit here and say that I haven't blown accounts with the ES yet, but I've blown these accounts on the ES due to trust issues. I just don't trust that the trend is real because of the PTSD that you get from trading the Nasdaq. Okay, unless that stop me out. Mm. 49. It should be, man. I mean, I know if they make it a regular account, they'll just make it expensive for no damn reason. They'll make it expensive. Because I mean, not a lot of people are. I mean, I think it doesn't necessarily matter what a lot of people is gonna do with that account. It's just that they're gonna find one good trader. Well, I guess there's a 25K cap on it. So I mean, I guess let me take that back. There's a 25K cap on it. So they know that someone can take more than a 25K payout on those accounts. And worst case scenario, my calculator at worst case scenario, they sold what 500 of those accounts supposedly. So they've sold 500 of those accounts. Worst case scenario, they pay out $12 million. Wow. Hey, worst case scenario is that you pay out $12 million. That's insane. They know they're not going to get that. Let's see. Let's just say that 20% of traders. So 2.5 million. Probably what they have to pay out. But they know that they probably won't even do that either. Honestly, I should have paid attention to that. So one of the biggest habits that I have to break is once I see the market fail to break above a high, then I have to stop trying to go long. It's no longer going long. It failed to break up. The market is now stopping up buyers. Buyers are now fueling this market lower. I have to stop doing that. This internal liquidity. Man, I was telling this to Alfred earlier, but man, dude, I just don't know. I just don't know. And you know, the sad thing is that Santiago shared this candle with us. This box marks out that candle. This is the 829 candle. So you can see that, I mean, if you took this trade this morning, like at the 50%, I took it at the 50%, it did come close to stopping me out. It would have been 51, 55, 50. Oh shit, it did stop me out. Oh shit, it would have stopped me out if I just took it short right there. But I wouldn't have taken it short at that 50%. I would have taken it short at the orb. I think we did take the short at the orb today. Did we not take the short at the orb high? I think we did. I mean, why wouldn't I short the orb high? I would have shorted the orb high. I think I did short the orb high, and I got out at the 50%. And then I tried to turn around and go long at the 50%, but it missed me. It missed me by like a point, and it did all this, and then I tried to short it, and I got lucky right here. If I didn't take the profits right here, it would have stopped me out. So if I didn't take the profits right there at those lows, it would have stopped me out. Mind you, my target was like right here or something like that. But I was like, well, let me just begin to trail it just in case it pops out at these lows, because that was a big, strong move. And I do expect for the market to at least retest the high. So with the expectation that the market could potentially retest these highs after probably running the liquidity underneath these lows and bouncing at SD1, I trailed. I got stopped out. I walked away from my screen because I didn't want to get angry. And it's like, man, it didn't hit my target. So, you know, I want to get a little bit of extra money. I come back and this thing pushes higher. But this candle right here, I was looking to go long at 51.75. 51.75 was my entry. But for whatever reason, I pulled that order. Pulled the damn order. I come back to the charts and see this big, massive move to the upside. I just walked away. I just walked away because I was like, dude, I did that twice or three times this week where I placed a limit of my initial analysis. Because it's like when I don't know where this intuition comes from, and I begin to think, well, why do I think that the market is going to react there? It's like an intuition. It's like a gut feeling, like, okay, yeah, it looks like this will be a good area for the market to react. You don't know how big the reaction is, but if you were to trade it, it will trade in your favor. But then I thought about it and I was like, man, the market has opened up a little bit bearish. It could go down a little bit more. Let me just pull the order and just see what happens. And I fell for that demon again, man. That demon just convinces me to not take these good trades. I don't know why. And every time I listen to it, and it's always great trades. So I was kind of disappointed in that earlier. But all right, yeah. So I got in right here. honestly, to be completely honest, this is just a you look to the left, it just kind of broke this range right here, and this is where I'm trading at, like the 50% of that range. I mean, that's it. And then there's these bearish imbalances that are right here as well. I mean, that's the reason why I took it with the ES. Hopefully it doesn't have to pop up and come back up here, but I took a chance on it. We'll see if it works out here. See, you know what, Alfred? It's not that the market went against me. It was like, well, actually, I don't know what you're referring to. Actually, I set a limit there. I said because you know I trade with limits most of the time. But if you're talking about this position right here, man, well, I gotta at least make. So if I'm gonna scalp, if I'm risking 4 points, my first profit target has to at least be 4 points, and at least for a 1-to-1. I don't play that negative risk to reward game, because even though people will sit here and say that they trade negative risk to reward, and I'm not saying it's wrong, but all it takes is for a couple of trades to go the other way and the account is gone. So I don't, for me personally, trading negative risk to reward is not my thing. So if the least amount of points that I would trade for is my stop, well, shit, that ain't enough. So that means I would have to go for a 2-to-1. So I can at least stay in the game if I'm wrong. At least stay in the game if I'm wrong. Versus negative risk to reward, and the account is gone. I mean, shit, I started off trading like that. I had a 12-point stop with a with like a 3-point target or something crazy like that. 6-point stop, 3-point target. I had to win 2 trades just to break even from 1 loss. I was playing the game backwards. It's like if I lose, then now I gotta win. I have to win 2 times just to make my money, just to break even. Versus playing it the other way around. And of course, I learned it from one of those gurus. If I remember the guy, if I remember who he was, I would show you guys. But that's where I got that idea from. When I first started trading, I wasn't familiar with the game. We talk about, yeah, I do this every day, make $900. I risk $1,200 for 2 or 3 points on the ES. And you know, honestly, in the back of my mind, I'm listening to him and I'm like, oh yeah, I can do that. But then I recall asking myself, if this dude is making $900 every freaking day with this strategy, why the hell is he going to work? And that was just on the back of my mind. But again, I didn't know that they were scamming. I didn't know that. But that question did pop into my mind. I was like, well, maybe he just likes what he's doing. He's making $900 a day with this strategy. Let's look at that. There's like 21 days in a trading. $900 times 21 days makes $18,000 a month, and he's going to work. That should have been my first clue. Okay. Yeah, that's also true, Red Kid. That's why I put a trailing stop. That's why I now have a trailing stop. Like after it goes past a certain point, my stop comes down and it begins to trail. So I don't have a lot of my good trades turn into losers. If I lose, I lose. But if I have a good trade, my target is like maybe 15 points, but my stop Like after it gets past like 10 points or something, my stop comes down, I believe. I think that's how I have it set up. Like if it goes past 10, my stop goes to 9 and then begins to trail. So I can make money, but then, you know, if the market needs to go back to my break even, like it always wants to for whatever reason. Hold on, you say you brought a XFA 2 years ago, but you didn't know you had to activate it? Hmm, that's interesting. Yeah, that's also true, Rocket. Well, you guys might actually start seeing that with the ES. That's what I'm working my way up to. That's what I'm working my way up to. I can't. I won't. I won't oversize with the Nasdaq. I'm not gonna oversize with gold. But y'all guys already seen that I will do that. I will be in this thing 45, 50 contracts with ES. So I'm working my way to that. But like I said, I have to become more confident with the ES. Because like right now, trading with 7 micro contracts, taking multiple trades, we made about like what, we was up $1,500 and then I made a mistake and then we lost it all, but I made it all back just trading 7 micro contracts. So if I'm trading 7 micro contracts and we're making 3K a day, because I did start out with 15 contracts and we did good trading 15 contracts. It's not like I had any issues trading 15 contracts. It's just that, you know, if I have a string of losers, then, you know, I only have the account. I can only lose what, 9, like 5 or something trades, and then the account is gone. Because I think with 15 contracts, with my 4-point stop, it's like $300. You have a $2,000. Yeah, like in 6 trades, I lose the account. So I just reduced it to half the size, to 14 contracts, and that's been working so far. I can take multiple trades. I can lose multiple trades, and you know, like this morning, I had like a series of trades go against me, and I was only down like $500. It wasn't until I started super fighting the trend that I lost way more than I expected to lose. Shit, we almost took that big $1,300 loss this morning. I'm just glad that
Mark Zuckerberg, US should not prohibit Chinese AI, FT.
I'm just glad that the ES kind of moves a certain way, because it rejected at like the 50% of that big leg down. It rejected at the 50% of that big leg. Yeah, like it rejected like right here.
Zuckerberg,
Like
banning advanced Chinese AI in US, not an effective solution. FT.
Yeah, it rejected somewhere in this area. Today's the 28th, yeah. And I was able to get my money back and break even. Or was it like up here or something like that? Yeah, it was like, this was the leg. This was the rejection right here. Or it was somewhere. It was somewhere. I think it was this though. I think it was, yeah, I think it was this. And then I was able to get my money back with this. That moved down. But, Yeah, that's true. You said. I mean, I think. You know what, Alfred? I mean, the biggest reason is because the Nasdaq is just getting so crazy now. It's just getting so crazy. It's just getting so crazy.
South Korea finance minister internally reviewing methods to stabilize domestic stock market.
It's just getting so crazy. And it was already something that well, like I said, the biggest reason is that 250K account. I was already going to trade the ES so I can take that account to new heights, because I already know with the Nasdaq. I mean, I've already shared the story with you guys. The first day in that 250 account, I almost lost that shit. I almost lost it with the Nasdaq. The Nasdaq did something crazy just for it to go in my direction afterwards. Like, you know, like that bullshit that the Nasdaq likes to do, where she goes in your direction. She goes in your direction, and for whatever reason, she pops back up to take out more liquidity above the highs, and then she comes crashing down. I literally had that happen. Man, I was in, I believe, 6 or 7 minis to get my money back. Almost lost, well, not lost the account, but hit daily loss limit in that account the first freaking day because of that shit. And that's I was like, dude, straight to yes. There's not gonna be an account like this for a very long time, unless Top Step makes this like a permanent account. This is truly a freedom account for real. 10K. You got a 10K balance. You gotta make $1,000 a day. You can get a 25K cap payout on that shit. I think they try to probably put you to live on that. If I take that account serious, I mean, I can make a lot of money in that account. I can make mistakes in that account. I don't have to worry about anything. Just trade. And then I can just trade that account. Nah, it's like a 5K daily loss limit, yeah. Yeah, you know, Red Kid, that's exactly what I thought too. I was like, man, I might as well just specialize in trading the ES. Might as well. Might as well. I mean, shit. I mean, I don't talk about this enough, but I mean, the first time that I went mega viral was because of the ES. I didn't expect to go viral on a freaking ES post, but went viral on Twitter because of a freaking ES post of an ES trade that I didn't even take. Okay, well, all right, so it looks like I'm going to be stopped out here, so I'm going to just plan my next trade already. I'm planning my next trade. Yeah, it looks like it's going to bounce at that low right there. Looks like, I mean, we'll see. We got this 15-minute imbalance right there. Like I said, the 15-minute imbalances are very powerful on the ES. She doesn't play about her 15-minute imbalance. So She don't play about that. She don't play about that. What is that? 66. All right, so here's what I'll do. I'll do this. I'll add into that at that imbalance right there. I'll add into it right there. And this just take the whole thing off. Let's just take the whole thing off. If it trades above that 15-minute imbalance, because if it trades above that, then pretty sure. We got our little trend line right there. So what I'm looking for potentially, if it doesn't stop me out, you know, potential something like that. Do something like that, maybe. All right. So I mean, if it fills this order, I'm only going to do like a 2-point stop. I'm only going to do a 2-point stop on that one. Because it looks like the market is building up the liquidity underneath this support trend line. This rising support trend line. It looks like it wants to kind of take out these lows or potentially take out these lows right here. We'll see. You think so? Yeah, because we have FOMC tomorrow, and then we have earnings tomorrow as well. So we have the monetary policy, the rate decision for tomorrow, and then the next day on Thursday. What the hell? FX Street? Boy, your website is always something stupid. We have GDP and PCE on the same day, which is interesting. I guess they wanted to get GDP and PCE out on the same day because Friday, this is the last Friday of this month. We already know it's going to be super crazy on Friday, and there's going to be double super crazy on Friday because it's the end of the month. We always have to remember that at the end of the month, institutional traders have to meet certain goals. And for the traders that haven't met those goals, they're going to be the ones in the market trading heavy to try to meet their goals. So it's always going to be super volatile on that last day of the month. So always keep that in mind. He says it's worse than Diddy. Dang, the New York is like that now. New York Diddy. Interesting because Diddy is the king of New York, isn't he? Excuse me. Diddy and Trump. King of New York. Man, I doubt it though. Man, it does 55. I mean, I guess it could bounce there. Good. But I think it's more likely to go down lower. I think it's more likely to go down. That is pretty bullish. Those 15-minute candles. That's pretty bullish right there. So like I said, we could probably see the market come all the way back down to the 50% of the orb this morning. We could see that. And then a retest of the orb high somewhere.
China Finance Ministry to sell 15 billion yuan government bonds in Hong Kong on August 5th.
Bunch of fucking weirdos. Yeah, because I guess all the institutional traders are like, we're just trying to avoid all the prop firm traders and get in at Asia, but getting at London, I guess they figure it's just easier to do what they need to do during the Asia session. Hmm. Okay. Like I said, I'm only gonna have a 2-point stop on this one. If it fills that limit order and it keeps going, I'm only gonna have a 2-point stop. I'm not going to hold this one longer than. Alright, let me just hurry up and readjust this. Put everything right here. Everything's gonna come off right there at 68. So if the market doesn't reject at this at that 15-minute imbalance right there, and it keeps going higher, that's where I'm gonna get out at right there.
Iraq's Popular Mobilization Forces, US Saudi troops strike PMF headquarters across Iraq.
Man, it's never enough.
Iraq's Popular Mobilization Forces. Attacks kill several, wound others.
Didn't they already didn't they already come out today? Mm.
Industrial plant in Russia's Ryazan catching fire after drone strike, regional governor.
Mm. Mm. Man, coming all the way back down to 60 would be all the way down here. Yeah, it looks like I'm gonna definitely have to do it then. All right, so it looks like we're just standing here then, huh? And when the market just slows down like this, guess it's all part of the game. I guess in the meantime, take a look at the Fed Watch tool and see what we could potentially expect for tomorrow. So the next 15 hours, 23 minutes, and 44 seconds, we're going to have our rate decision. The current target rate is about 350 to 375 basis points right now. So I guess 69 to 70% of speculators expect for the market to stay current. And there's a 30% chance that we might actually see a raise, actually. You said Nvidia. Yeah, this is the
China's central bank carries out overnight reverse repos on Wednesday, with borrowing cost at 1.25%, unchanged from previous operation in June, sources. Taiwan shares fall over 3%.
So it looks like the minis already don't get no love, or the micros. The micros already not getting love so far on the stock futures. Did I get stopped out? And that's another bad habit that I have to stop with the ES. I have to stop doing that. I have to stop doing that. Yeah. I have to stop doing that. I have a bad habit of getting in as it's going down. Ooh. I'm pretty sure the Nasdaq isn't doing anything either. And the Nasdaq is basically doing the same thing. Oof. If I just get rid of some of these stupid bad habits I have. Well, you know what? Maybe, I gotta stop doing that too. I mean, because technically. Oh, what did I trade at? That's when I did that. Did I get, hold on, did I get stopped out? What did I do? Just keep it wet. I think what I need to do is change the, yeah. You know what, Alfred? You know, sometimes I would like it if my ego would allow me to do that. It's just easier just to get in a full position so I don't have to fight with my ego. So if I get in with 1 micro to test the water and then it crashes down, I already know what I'm gonna do after that. I'm chasing it. You know, honestly, I almost convinced myself that that was probably the better way of going about things, is just getting in with a light position and then adding to the position as it goes in the direction. The compromise I came up with is just, I mean, y'all guys are seeing it now. Instead of a big 15 contract position, I'm just starting off with the 7 position, or 7 micro contract position. I've added into it with 7 micro contracts as it goes in my direction, like on pullbacks or something like that. But mm. I'll just leave it like that then. All right, so we're getting that trend line break. We'll see if, I mean, looking at it from another perspective, we should get at least a retest of that low. We should. There is a support, potential support at 59, so I have to pay attention to that. There is a support at 59, so if this thing looks like it's going to kind of bounce, but if it breaks this trend line, then I should be okay. If it breaks this trend line and holds underneath the trend line, I should be okay. Yeah, I mean, especially, yeah, because I mean, you basically got this thing balancing at the trend line. As long as we can kind of get under it. Hold on. Seriously? All right, so it's bouncing. It's bouncing. And as long as we can kind of get like right there, and then we can get that move down, that would be awesome. So if the market kind of does this right here, then we see that move down. I could potentially add like right there or something like that. But it's acting like it wants to, but when it's playing around at that trend line, so price is underneath that trend line, that means it's tapping into stops right now. The buyers could be getting nervous here, but when it's hovering in midair right here, when there's obviously the liquidity for it to make the move down, I begin to question it. But I bring your attention to this doji candle right there. We got a doji on the 15-minute. So I should be good on this. Should be good on this. Let's see. what I'll probably start doing is once the market is going in my direction, I'll probably add like maybe 5 or 3 contracts to it, 2 contracts to it maybe. I haven't really decided on what my policy is going to be for when I add to the position, because I mean, this thing can pop up and I can lose a lot of money in a short period of time because I don't have an optimal entry. I'm just betting on the fact that it can continue to go down. So what I'll probably start doing is probably adding like 3 contracts so I can have a big stop, like a 6-point stop or something. But I only lose like $150 if it hits my stop or something. But then, I mean, that's the double-edged sword with the ES. That's actually probably a good re-entry right there. I missed it right there. That's probably good. Yeah, that was probably a good re-entry right there. Okay, so I added into this position. We'll see. I added in at that trend line. Like I said, the one thing I don't like about this damn thing is that it's just hovering at this trend line. Just drop. It'll probably drop about maybe 9 or 10 points. So I'm gonna be mindful of that. Be mindful of that. Clean that up right there. Cancel that order up there. All right, so far so good on this trade. We have our original entry here. We waited for the pullback. We entered at the top of the trend line. All right, all this thing needs to do now is just need to get a good bit of separation down, and that'll be awesome. Let's get a good. $59. There we go. That's the acceleration that I was looking for. All right, let's see. Let's see if we can get a nice push down here. Let's see if 59 might be a problem. 59 might be a problem here. Hey, what's up, GK Trades? This is a 1 minute chart. And those candles right next to it is a 15-minute candles. So this is a 1 and 15-minute chart right here. But I'm not executing on a 1 minute chart. I'm actually executing on a 1000 tick chart on the ES. These time-based charts are just mostly for you guys, honestly. I don't trade on these. $1,000 tick chart all day on the ES. Take chances, make mistakes, and get messy. That's why I was like, man, this is the slowest trend line break to the downside that I've seen so far. It's not probably the slowest, but it's pretty slow though. The market is obviously tapping into the sell stops that are resting underneath this trend line, and the market is definitely taking its time. Maybe the market is trying to, well, actually, let's do this. I sometimes do this, and I have to probably do it a lot more. I gotta look at how much volume that we're using. 100,000 contracts is pretty good on the ES, but for the ES, anything under 200,000 contracts would be considered low liquidity. So right now, at least for the ES, we're currently trading under 200,000 contracts. So right now we are trading in a low liquidity environment on the ES. The Nasdaq, obviously, almost 500,000 contracts during the Asia session. And this right here kind of, I wouldn't say that it confirms what I was saying, but it definitely points to it. We have all this volume during the Asia session, and I believe that these institutions are trading at these hours to avoid all the retail, all the prop traders that are in the market, all the craziness. Because of the stigma that the Asia session is very dangerous, and it is, man. I believe the Asia session is very dangerous. You just don't know what you're going to get. You really don't. All right, so let's see. Let's see. Got the market slowing down here. Curb your enthusiasm. Looks like the bulls are trying to buy at S1. One of these Camarilla pivots. They're trying to buy it at S1 right now, and bulls just let it go. The faster you sell out of your positions, the faster the market can go to the upside. So hurry up, just sell out of your positions. Let's retest those lows so the market can start making that move to the upside. Damn. You blew your account today in yesterday's Asia session? Yeah, the Asia session yesterday was crazy. Another reason why, I mean, only the institutions can do that. The institutions only has the this much influence on the market to do this during the Asian session. And then they took the liquidity above these highs. They actually almost double topped here, right here, at that pivot right there. And the market drops and it takes out that low. It double bottoms at that low almost. And then it takes out the high. A lot of crazy price action. It's a lot. This is very volatile. There was one point in time, and believe this or not, where traders were talking about how volatile the ES was compared to the Nasdaq. If you started trading after a certain point, you would think how crazy that would sound. You're saying that the ES was more volatile than the Nasdaq at one point, and older traders will tell you that the Nasdaq or the ES was actually very volatile. But obviously that's no longer the case. Obviously. But it seems like we're getting some of that volatility back in the ES, because we all know that the ES, when the ES first started making moves like this, we thought it was the end of the world. We thought it was the end of the world because the ES did not move like this. Now we're so used to the ES moving like this that can we ever go back to ES having 15-point days after just casually having 100+ point days? Can we go back to a 15-point ranged ES? You can make a lot of money when the market ranges like that, because you know that you can just fade pops, you can fade drops, you can just trade the range back and forth with the ES. The ES was it was very predictable. I mean, you already knew that it was going to probably trade 15 to 20 points, maybe. A good trade was a 10-point trade. You can size in with 4 to 5 minis, get a good
Voice
trade.
news disconnected.
Only people with a lot of capital now on the ES is putting on 4 to 5 minis on the ES.
Voice news disconnected.
All right, I just connected it. Damn it.
Voice news disconnected.
All right, man. Unless it's not connecting because it's
Voice
something.
news disconnected.
All right, well, all right. I guess we're not getting any voice news for the rest of the night. You know what? Gain weight. Once you explained it to me, way back when, I've always believed that well, let me be very clear. I don't believe that we're trading it in a sandbox environment that imitates real markets. I do believe that these accounts are touching real markets, because if these accounts aren't touching real markets, why do these prop firms have to pay CME? Why do they have to pay Trade-of-8, Ninja Trader? Why do they have to pay these platforms a monthly bill if we're not touching real markets? And if you're a developer of any kind, or someone that's in charge of a product that's in production, you know that having two separate environments running simultaneously is unheard of, because the maintenance would be crazy. There is no sandbox sim account. The only difference is that the only difference is that, I guess, these quote unquote sim accounts is that obviously you're trading simulated funds, but you're not trading in a simulated environment. I don't believe that. I just don't. And then after the prop firms started getting big, then the market started trading crazy. There is no way that we're trading in a simulated environment. That's my belief. It's my belief. Yep. Because it's like this, it was like that argument for a very long time where people would call you crazy because you believe that 80% of the executions that were placed on the market were done by algos. That was a big thing for a long time, and now we know that to be true, that algos make up the majority of the market. There's an algo that runs this market. The algo is the market maker. These executions cannot be done by humans, but by bots. We're not saying that there aren't any human market makers anymore, but majority of them got replaced by bots. We know that to be true now. But he's like, oh, put on your tinfoil hat. Oh, you think there's algos in the market? You know? So, I mean, yeah, I believe that to be true. Hopefully this thing is not trying to bounce here, because I was looking at 59, or shit. Oh yeah, it already bounced at 59. Oh shit, man, god damn it, I wasn't paying attention. I wasn't paying attention. Oh my, I wasn't paying attention. All right, hopefully this thing doesn't bounce and go all the way back to my break even. Shit. Hopefully this thing doesn't go all the way back up to my break even, but I think it bounces here, but does this thing? I don't think this thing recovers here. I think we just see a bounce there, but I don't think it recovers. If it recovers and stops me out, that would hurt my feelings. Yeah, because I was looking at 59. I mean, not because it's just that right there, and then we had this leg right here break structure to the upside. Oh, fuck. Yo, nice, man. Yeah, vintage. You definitely have an eye for these big moves. You definitely have an eye for these big moves, man. Congratulations. Damn, dude. Damn. Damn. That's an insane candle, man. Oh my god, that's insane. Man. I think this is why I avoid trading the ES. Because I know the levels that I should get in and get out at, but because my target is beyond it or right after it or whatever, it's like, yeah, get out at 59. Get out. This thing pops from 57 all the way to my damn break even. Yeah, it does, man. It makes sense. It makes sense. It separates your focus right now. All of your focus is on these charts. That's why I have to set up a schedule, because if I'm trading, I'm not working. If I'm working, I'm not trading. So if I'm trading on tilt, then I'm falling behind on work. And good thing I trade, or good thing I work from home, because my schedule, as long as my work is done, there's not anyone. I mean, that it's not just me; it's our entire team. As long as the work is done, there is no micromanaging, so that's good. But if I'm angry about something that happened during like the morning stream or something like that, I'm distracted from work. I'm not even focused or anything. Yeah. I mean, shit. Let's actually look at that. All right. So Venture said that he took a sell at 150. Let's look at the MNQ real quick. $28.50. Oh, okay, yeah. Okay, that's pretty obvious right there. That's pretty obvious. Let me look at something real quick. You know, honestly, I used to be very patient when I used to trade the Nasdaq, or way back when, and we would get 500-point days on the Nasdaq. Now I just don't have that patience anymore with it. I don't know what happened to it, but just don't have the patience for it anymore. Let's go on the 15-minute. You know, there was a lot of clues in that area. So one of the tricks that I like to use, and I'm pretty sure Vintage probably saw the same thing as well, is that you already know, or at least you should know, that breakouts for the most part fail. You can look at your chart and see that breakouts fail. The market broke above this high. It even hit the 200 EMA too on the 15-minute chart. And it was pulling back. If you look to the left, there's also a range to the left. And I know Vintage mentioned previously that he actually looks at higher time frame charts. I don't look at higher time frame charts at all. But if you were to look at higher time frame charts, you can get the big moves, like the big moves, but you just have to be patient, super patient for them. Super patient for them. But we had price literally run these highs right here, and it failed. This would have been a sign. I would have shorted this. I wouldn't have held it that long, but I definitely would have shorted that because of that failed breakout. Probably shorting the top of that or that high again. Look at the daily chart on this. You said I lost patience when NQ constantly stopped me out. You know, the crazy thing about that, Alfred, is not the NQ that would stop me out. Not on the big trades, no. If I got a big trade, I don't get stopped out from those because my limit order is sitting at extremes. And I have a pretty big stop. So I don't get stopped out of those trades. The trades that I would get stopped out is smaller trades. But I don't like waiting on those trades though. I don't like waiting on those trades. I mean, ever since I consistently got getting the idea of getting paid out every week, waiting for those big trades. Now that I think what happened is when these firms moved from the P&L amount to having consistency across multiple days. I think that's probably what did it. Because when they moved to having a consistency across, having a consistency rule and having the trade across multiple days, waiting for a big move that may not come on that day is very discouraging. Having my limit set and it's like I set my limit, walk away, come back, it doesn't hit my limit order. So I feel like I wasted the entire day. I didn't make money that day because I was waiting on the limit to fill that didn't fill, just for it to fill like maybe the next session or something like that. And I want to get paid out every week. Okay, so basically, all right, great minds. So basically what I explained, that's exactly what Vintage, that's what he did. I mean, rule of thumb, like if we're seeing a failed breakout, that's it. If a failed breakout and a failed breakdown, you shouldn't go long. And honestly, that's the mistake that I made earlier today. I made that mistake earlier. But I make that mistake because I'm so wired on that break and pullback trade. It's just easier to take the trade instead of fighting with myself about it. Because if I take that trade 10 times, it's going to work 8 out of those 10 times. So the 2 times that I'll lose it, I guess my ego is just willing to take that risk. But the same failed breakout right here, if I go long on that failed breakout, it's just going to go lower. It's just going to go lower. And I still take that trade. I just don't. I guess I don't want to take the time to try to differentiate. It's like, okay, is that a failed breakout? If that's a breakout. But that was obviously a failed breakout above these highs. So I shouldn't have taken that long down here. But as I was looking at it, I think, yeah, I took the long, excuse me, right here. It stopped me out and then it bounced and it went higher. So it stopped me out at 58 and then it bounces 5 points later and then it makes a run. So if I actually, and then it actually comes back. Look at that. Look how disrespectful that shit is. This thing breaks higher and literally taps my entry, my original entry to go long for the move back up into this area. Wow. I just noticed that. And that's something else that I have to stop doing as well. I'll blind myself to certain price action that gets in the way of what I'm trying to do. If I'm trying to go short, anything that looks like a long, I'll blind myself from that. And then see it all after the fact. After I review the charts, it's like, oh shit, look at that. I really didn't see that it literally used my original entry, and my original entry would have been a perfect entry right there. And from there, that would have been like, what, 58? About like a 10. All right, so like an 11-point move right there. Mm. This thing should hit our profit target. We should get a profit target. I mean, that thing rejected literally at my break even. We should get a break at that low. We should get the market to retest this area down here. We should get a profit target here. Okay. Yeah, we should. Okay, there it goes. We should get a break of that low. All right. There goes my stop, my trailing stop. All right. So we got it locked in, baby. We got it locked in. We got our. There we go. All right. Cool. Oh, yeah, we got. Okay. I guess we're still in this. still in this piece of it. There we go, baby. All right, so let's see. Um, I don't like that wick though. I don't like that wick. We'll see what happens here. And I definitely agree with that vintage. The 15-minute is definitely a very powerful time frame. I don't go any higher than a 15-minute. The biggest reason why I don't particularly look for higher time frame support and resistance myself personally is I've been trading on tick charts and smaller time frame charts for so long. I'm used to this structure right here. And because my trades are based on market structure, when I go to higher time frames, I don't know what the hell I'm looking at. I mean, yeah, I guess I could just look at it. Could look at it right there. Shit, that was a 15-minute imbalance right there. The market traded right into that 15-minute imbalance, the 15% or the 50%. And this was an 86. Yeah, so this was a 16-point trade on the ES. That's a pretty big trade on the ES. It looks like the market, I think it tapped the bottom, the underbelly of this 15-minute imbalance right here. Yeah, it traded into this 15-minute imbalance, and then we saw the rejection, but it didn't trade into the 50%. I think if the market trades higher here, it'll probably trade right through it. Then we also have some other 15-minute imbalances. I already got my sell limit already up here already. I might just do that or something. Right there. There's another one right there too. But and then vintage said looks at the hourly as well. Let's look at the hourly. Okay. The hourly. Yeah. Honestly, I have no clue what the hell I'm looking at this point. There's a 1 hour order block right there. That's something that I initially see right there. 1 hour order block right there. Another 1 hour order block right there. Okay. All right, so I think we're about to get a profit target here. I think we're going to get a profit target here. All right. Nice. Nice. We should get this filled. There we go, baby. There we go. All right, we're done. And that should fill the target right on time, right at 10:30 at the end of the stream. Great. What a great trade. What a great trade. So, man, I could have squeezed out a little bit more on this trade. I probably should have readjusted my target to get out at 59 like I plan on doing. What I didn't expect for this to be such a strong move like this. All the way back to my break even My stop was well above these highs, and that's a great thing about trading the ES. You don't necessarily have to worry about the random moves higher, the liquidity grab that the Nasdaq pulls. You can just feel safe and assured that if it breaks this level, it's going higher, because that's what it's always meant to do. It's not going to break a trend line and then break a high just to take the liquidity above these highs and then drop. But I could have gotten stopped out on that trade. So and obviously, it's still going lower, so I'm leaving money on the table. But I got big profit target. We're positive on the night, and it looks like the market is going to go exactly where I think it's going to go. So okay. But I mean, the biggest driver for this trade was this trend line break right here. Once the ES breaks a trend line, that's kind of all that's all she wrote for whatever side of the market that she breaks it on. The ES doesn't play about her trend lines. If you trade against a trend on the ES, if you trade against it, you'll just become liquidity. It took me a while to accept this after being a Nasdaq trader for so long. But if I trade against a trend line break, well, I'm just donating liquidity to the market. If I trade against a range, I'm donating liquidity to the market. She don't play about her ranges. She don't play about her trend line breaks. She don't play about her double tops. She don't play about her double bottoms. She just doesn't play like that. So, but all right, guys, again, we'll just come back tomorrow. We'll make some more money. And, yeah. But I do appreciate everybody that joined me tonight. We'll definitely come back. Actually, remember, we do have FOMC tomorrow, so we could see a lot of crazy price action, if not overnight, during the New York session. The projected expectation for tomorrow's meeting is that we will remain steady at 350 to about 375 basis points, and with a 30% chance that we actually might get a 25 basis point increase tomorrow. If we see a rate hike, we could see more downside. That means that the monetary policy is becoming more restrictive. That means money is more expensive. That means things will cost a lot more. And when things cost a lot more, that slows down the economy, or at least in theory it does. But as we kind of go into the future with these FOMC meetings, it seems that the market believes that over time, as we go, we're going to see a rate increase. Look how this is the current rate right here, and look at the market believes that we're going to see a rate hike eventually. And once we see that rate hike, well, bye bull market. I mean, the bull market is already kind of done already. Look at that. As we get into next year, July of 2027, so the market is projecting that we're going to see a rate hike of at least 25 basis points. Or my bad, I apologize. I misread that. This is a decrease of 25 basis points, but it's less than 5% chance, or 5. I think this is said, actually, I don't know. Anyway, because I think when you say like 0.4%, I think this is also saying 4 basis points, if I remember correctly. But or no, okay, no, I had it right. This is 0.4%, because this is the percentage of how people, market speculators believe that we're going to see a drop. So I had it right. I was overthinking that one. But anyway, yeah, as we go down the line, the market believes that we will be seeing an increase. This is where we're at. And people believe that we can probably get back up to 5 basis points. That's crazy. How I identify the trend?
Bank of Korea Governor Shin maintaining tightening stance most rational to curb core inflation.
I mean, we could talk about that for like a few seconds. Yeah, sure. Like I said, I go to the 15-minute chart. I also look at the 15-minute chart. I may occasionally look at the 1-hour chart for direction. But honestly,
Gov Shin. Policy response timing and extent to depend on upcoming data, economic conditions.
To be completely honest, I'm not necessarily a trend trader. I'm more of a range trader. So how I envision the market is always a range. I'm always looking at the high and the low, and I'm trading within that range. Any trend that happens, to me, all price is doing is leaving the bottom of the range and is traveling to the 50% of the range. If the market doesn't react at the 50% of the range, then it's highly likely that it's going to at least 75 to the high of the range for the most part. And that's how I trade. I don't think in terms of direction. I think in terms of where's my high, where's my low, and what is price doing? Where's the 50%? What is it doing at the 50%? Is it rejecting at the 50%? Then I'm gonna get in short. If it's breaking above the 50%, I'm waiting for the pullback and getting in at the 50%. Is it going to the high? Okay, let's target the high. Is it breaking out from the high? Okay, if it's breaking out from the high, let's see if it fails. If it fails, I'm shorting. That's my interpretation of the market. Because when you think of what direction it's going, maybe at one point in time, with a high accuracy rate, we could predict that. But with Trump in the White House, and that's not a negative remark or anything, it's just with Trump in the White House, unfortunately, when he drops a tweet, it has a big impact on the market. So the market could trade to the upside. He says something, and then we get a big candle down. So with all this volatility in the market, it can go up, and then out of nowhere, it can just go down, and vice versa. So I believe it's just easier to just trade what's already happened, and what's already happened is that high, low, and midpoint. That's how I look at the market. Yeah, what's up, Santiago? Hopefully that answers your question, because I feel like that's like the best way to trade something. Look for imbalances. I will say this before I get off. I understand that ICT is it can be triggering for some people. Let me say this, because I find it very interesting. What people do is they'll talk shit about, you're trading ICT, trade this instead. And then when you actually look at what they're trying to sell, is basically what ICT already came up with terms for, repackaged into something else. I literally saw someone today, and I'm not going to say their name, and I'm not going to say what they called it, because if I say what they called it, then you'll be able to identify who this person is. But I remember vividly that this person was saying, you know, you want to trade that order flow, ICT, blah, 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 blah. Just trade the market structure. And I agree with that because I trade market structure. But I also combine that with other things. And no lie, today I saw something that was literally just a fair value gap called something else. It just made it complicated and just called it something else when it was just basically a fair value gap. And I was like, wow. That's why I will use the term imbalance, because I mean, that's what they are. But you know, the fair value, if price returns to that gap is considered fair value. And that's the term fair value gap. Now, for a very long time, I would not trade with these imbalances on my chart because I thought they were stupid. I, without realizing, agreed with majority of people saying that these things didn't work. But I was wrong. I was mistaken. I don't know what told me to put these imbalances on my chart, but the day I put it on my chart and saw how the market would just react at these areas, I knew that I made a mistake. I acknowledge I made a mistake, and I trade with these on my charts because now I know where these imbalances are on the chart, and I know for a fact that the market will come back to these areas, fill these areas, and it will react. Now, not all of them will work. Obviously, they have to line up with some form of support, obviously, like right here, where you got to break a structure in an imbalance. Obviously, the market is going to come back into this area and reject, obviously, because it's near structure. I mean, right here, this 15-minute imbalance, price literally traded to the midpoint of it, and it rejected. And mind you, this is when the market had this bullish run. It tapped into this area, and then it dropped. Another imbalance right here. The market traded into this imbalance, and it dropped. And you can see that the market actually used this imbalance actually 3 times. The market rejected at this imbalance 3 times. It broke to the upside above this imbalance. It took the liquidity underneath the imbalance, and then it pushed higher into this imbalance. So, yeah, these things work. Oh, nice, Santiago, nice. Well, GK trades. What do I want to ask this? So you're saying that you're struggling with the direction and you end up fighting the market. I fight the market too sometimes. That's actually something that I'm trying to break away from, actually. I do that too. But I'm fighting the market at support and resistance. I'm not fighting the market in a random spot on the chart. Kind of going back to the next is 8K, do you know, per day? Yeah, Lucid is very from what I've seen, Lucid is very adamant about moving you to live if you're making too much money. I think Alfred said that yesterday, is that if you make like 8K, they move you to live. And they're serious about that. They're serious about that. Because I think if the faster they move you to live, they can just take a percentage of your profit split instead of that sim money. Because I feel like with sim money, they're making, if everybody's in sim, that means they're making money off of failed accounts. If they're making money off of live traders, they're just taking their profit split. So obviously if they make $10,000, they're just getting $1,000 from the profit split. So that's my assumption. Obviously, I don't work for Lucid. I don't know how any internal workings of their business works. I don't know. It's only an assumption. But what I do know is that they will move it live. I've seen too many people talk about that. But going back to your question, JGK trades. And I know this is going to be hard because, like I said, this is something that I'm trying to change as well. And I'm assuming that you're trading the Nasdaq, and that just adds to it. That adds to it. Is there a reason? Oh, so I'm assuming that you're trading the Nasdaq. What instrument do you trade? I guess let's start there. What instrument do you trade? Gotta wait 3 more days for a payout. With the Nasdaq, it's so easy to pick up on bad habits that you'll be rewarded for bad habits. And the Nasdaq will do it so often that it becomes a way that you trade. And then when the market is actually going, because for me, my worst days are when the market is delivering price in one direction. I am a big inverse trader, big mean reversion trader. If the market is going down, I am buying. If the market is going up, I am selling. I've never felt comfortable selling on the way down and buying on the way up. Just never felt comfortable, or never. I just do not feel comfortable trading that way. But the ES is definitely showing me that if I don't adapt to that style of trading, then I'm just going to lose all my money with ES. Because I can sell on the way higher with ES, but if it breaks structure and I try to sell it, well, I'll just become a liquidity donation. I mean, it's just as simple as that. But obviously with the Nasdaq, you can get away with some shit. Okay, so you trade both the MNQ and ES? Yeah. 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 So yeah, with the Nasdaq, yeah, it's tough. It's tough with the Nasdaq. But here's something, here's a trick, but it just requires a lot of patience. It only works if you're going to be patient. It only works if you're going to be patient. And you have to actually wait for the initial balance to form. The Nasdaq 100% respects the initial balance. Anybody that's saying trade the initial balance for the Nasdaq is absolutely right. I've found that to be true myself. But you have to wait until it officially forms and then take your trade ideas from after when it forms. Just put the initial balance on your chart. Look over what the market does at the highs, the lows, the midpoint, and you'll just see that the market just reacts beautifully at these levels. But you have to wait until 9:30. If you don't, then the next best option is exactly what I said. Look for the most recent high and the most recent low. And trade the levels around that. Trade the levels around that. So that's the recent high. That's the recent low. You trade at the 50%. It doesn't work. I mean, you almost got to bounce at the 25%. Let me actually put a fib level on this. Put a fib on this. Oh, I got it backwards. All right, so it looks like that golden zone that people talk about at 70.5, it pulled back into this area, and then it bounced for a retest of the high. This is a swing point right here. Look for your most recent high, your most recent low. And it came back into that area. I mean, it did break, and then it pulled back into the area. And it looks like it rejected at the 50%. It came back into it. It rejected at the 7.9. And then it came right back out. We kind of do the same thing here. I mean, obviously price hasn't traded into this area. So actually, let me do one where price already kind of traded into the area. All right, so that's the high. That's the low. It traded into the 7.9 right here. So just look for the most recent swing. Look for the high. Look for the low. Draw out your fibs. And just take a chance at these deeper pullbacks. I mean, we don't ever know what the market is going to do until it gets there. Look for ranges. The Santiago 50. Look for the Santiago 50. Look for your ranges. The market somewhat likes to go to the 50%. I mean, there's a lot of tips and tricks in this market. Oh, you go right there and try to put your limit to the 50% right there. I mean, shit, this allows you to double dip at the 50. Got this consolidation range right here. And it pulled back to the 50% and then it dumped. And then it pulls back to the 50% right here and then it dumps again. How do you say your name? Is it not Arabs? Is that your name? But I'm not gonna say that though. So you say that you lose a lot of money when the price retests. You think the direction will change. That's your problem with trading. Okay, because of the retest. Well, actually. Actually, let me cancel these orders. I got lingering lemon orders just sitting here and there. It really depends. Yeah, what's up, Yogi? You said put you on. Are you in the Discord? Hold on. Yeah, they have. The Bears. Okay, yeah, that's fine. Yeah, yeah, I mean the Bears have finally, I think after what we started this, it's been what, 6 years the Bulls have full control of this market. I mean, technically the market is still bullish. I mean, as crazy as that sounds, it don't feel bullish, but the structure is still bullish. And I think it's going to probably pull back. And then we can probably see some bullishness again after it pulls back, and they probably retest the high maybe. If you draw a fib on this thing, Let's see where the 50% is. I think that's so silly that it does that. Because technically, this could just be a pullback. I mean, this is a break of structure to the upside on a higher time frame. This is the daily chart. This could just be a pullback. Okay, so the 50% is right here. We have a range right there at the 50%. So this thing could bounce. We could see a move back up to 30K potentially. Or we could see a deep pullback into that golden pocket that everybody, that's 7.5. And coincidentally, it lines up with that range right there. It lines up with the range right there on the daily chart. So we could see the market kind of pull back into this area. Then we could see a massive move up, but shit, that would be such a move down to 25K. Yeah, that's true. It's not true. I mean, well, it's not true. It's true. You just have to, you really have to understand what's happening. And remember, ICT didn't come up with these concepts. He created terms. I mean, he created terms that if we talk about it, if I say the word, we all know exactly what I'm talking about. He just popularized the terms describing what the market has always done. That's it. But we have to appreciate his body of work because nobody else did it. Nobody else was doing it. Nobody else was doing it. So we have to appreciate his body of work. Regardless of what we believe or think about him, it's ICT that people reference when they say that I became a millionaire because of the concepts that he teaches in his body of work. So unless you have a plethora of people saying that they've become millionaires because of you, we can't be haters here. So we have to at least appreciate that. Yeah. You know, honestly, actually, let me see if Top Step has it. I don't know if anybody, but an indicator that is helping me stay on the right side of the market is that a trend indicator. And I know Top Step has it. Let me see what it's called. Like a super trend or something. That's what's helping me stay on the right side of the trend. It's this trend indicator. Yeah, like something like this, I think. Now, obviously, it doesn't look crazy like this.
Timing and extent of policy response to hinge on upcoming data, economic conditions.
I don't know what the heck is I have an indicator on Bookmap that does this. That just keeps me on the right side of the trend. All right, so I think I what the hell? No, it's not VWAP. Oh, that might be VWAP. That is on the daily chart, isn't it? Yep, that's definitely true, Santiago. But like I said earlier, if you're just having a hard time finding the right direction, just mark out the recent high and the low and just trade in between that high and low. So instead of looking at the direction of the market, you just simplify it and think in terms of a range. Either it's going to break out from the top, either it's going to break out from the bottom, it's going to react at the midpoint. If you're just patient and just wait until it gets to these areas and then take your trades, your unnecessary losses will be reduced. And Santiago is right. If you chase, the Nasdaq will turn around and punch you in the face. So just remember that. If you chase the Nasdaq, she will punch you in the face for chasing her. She's a lady that she's the type of girl that she likes to choose you. If you allow the Nasdaq to come to you, she'll give you a nice big hug. She'll give you a kiss. And she'll run away from you. And she'll run right to your profit target. Now, if you chase behind her, she'll turn around and punch you in the face. I mean, it's just as simple as that. It's really just as simple as that. What instrument are you on right now? Are you on the Nasdaq or are you on the ES? We'll look at it.
Bank of England investigates Asian equity exposure at prime brokers, Financial Times.
If you're on the Nasdaq, we got a break of the weekly candle. All right, so you're on the Nasdaq. Let's look at the 15-minute real quick. And then that'll be it for tonight. All right, so we look at the 15-minute. Okay, so let's look at what happened. So the market failed to break out above the high. So like I said, this is a range, right? So we think in terms of a range. The market failed to take out the high. So, after it made its low, it made its high, it pulled back to that golden pocket right there. And honestly, if you kind of trade that golden pocket trade, I see this a lot, but you have to be patient for it. And a lot of the trades with the Nasdaq, at least the good trades, if you're unwilling to be patient, then you're just going to find yourself in situations where you think one thing is happening, but you end up becoming liquidity for the real move, for it to pull right back into that golden pocket right there and takes out the high. Now, since it's already traded from that golden pocket, since we already got a retest of the high, it failed to break out and it didn't react at the 50%. So if the market breaks the 50%, this is the only area that the market can go. Am I saying get in right here and target this? No. What you wanted to do was, like, the best entry was that pullback into the EMAs and getting in at that rejection, or getting in at that 50%. Right now, the market is so low, it could pop back up. You just don't know. But the market did break this low right here though. So I believe, and this is not financial advice, this is not a trade idea. If you take this trade so low, it is a gamble, but a retest of that low will probably be the safest bet. That'll be the safest bet. If it pulls back, if it allows you to participate in this trade, pulls back to that low and then continue down, that'll be the best bet. But like I said, I wouldn't recommend it. Now, what I would do is wait for what it does at this low right here. If it wicks and pulls back and the EMAs are coming down and flattening out, then that would be probably a good long. Now, if it wicks underneath that low and it pushes higher and you see a rejection at the EMA, that's actually a pretty good candidate for the market to break that low, because we know that the market doesn't necessarily break the low the first time. It fakes out at the low, then we see the push back higher. Now, if the market wants to continue to go low, the EMAs will come down, price will trade into these EMAs, and then we'll break that low. And then having your limit order right there, that would be a good short for it to go down lower to the next structure on the Nasdaq. Which I don't see. Okay, so yeah. Yogi talking about the voice. That's actually that's news. That's the news from Financial Juice. Let me show it to you real quick. So I paid for the Squawk Box on Financial Juice, and it just basically just randomly just spits out headlines. Yeah, but all right, guys. All right. That's all I have for tonight. Yeah, no problem, Yogi. We had a really great trade. I mean, again, since we kind of, we'll talk about the trade again. Actually, where did I even get in at? I actually forgot where I got in at. We had a good trade tonight. Really great trade. Actually, should I leave that limit up there? I'll leave that limit up there. I'll leave that limit up there. Yeah, I'll leave it up there. I'll leave it up. But I think this is the trade. Yeah, we took this trade right here. Yeah, price traded back into this area right here. We had a range right here. This was the range that broke structure to the upside. The market tapped right back into this. And this was, well, I didn't take this trade on stream. I had a limit order sitting here and I pulled it. I spoke about that early in the stream. And man, when I came back after I pulled that order and saw that it worked perfectly, you know, that kind of hurt my feelings. But obviously this area was a very important area for the market. So I did get in at the 50% right here because I thought that the market was going to react at that imbalance. It actually did react, but we didn't see the rejection that I was looking for. So when price was kind of struggling back in this area right here, and I saw the double top, the liquidity grab above that double top, I got right back in right there. And then I added to the position at the break of that trend line right here. And then the market decided to do this, but we talked about this was a potential area for the market to bounce because at least with the ES and with the Nasdaq as well, if you have a leg that breaks structure to the upside, it's highly likely, because you got to think that there was enough buyers here to break structure to the upside. So when the market pulls back into this area and you see the market grab liquidity underneath the low, we could potentially see a move higher. That's why I was like, I wanted to see what happens at this level. But when I wasn't paying attention, the market traded into this area. We saw a big move higher. It came all the way back to my break even. I thought I was going to get stopped out, but fortunately for us, the trade worked out in the end. We got a full profit target. Now the market has taken out this low. So the trade that I will be looking for is I want to see what happens at around 38, because there was enough buyers here to create the session high or yesterday's session high. So a great area to look for potential along would be here at 38, but that's not financial advice or anything. It's just a trade idea that you're going to take at your own risk if you choose to take it. Another great trade would be, since we have that break, a retest of the breaker structure right there. That'll be another great trade right there. So this range right here would actually be a new range for me right here. We'll see what happens between these 2 points. If the market comes back down and I start to see the bulls hold this area for maybe a retest of 45, so from 38 to 45 maybe, that could be a good trade. Or pull back to this low, this breaker structure, that could be another good trade. Yeah, that's exactly right, Santiago. Yeah. But all right, guys, that's going to be it for me tonight. I do appreciate everybody that joined me tonight. We'll definitely come back tomorrow morning, and we'll definitely look for more opportunities to earn some more money. And with that said, peace out, everybody, and keep on jabbing.